If you are like most people, you have a lot of options when it comes to investing your money. But which investment has the least liquidity? That's a question that many people are curious about, but not many know the answer to. In this post, we'll look at some of the investments with the lowest liquidity and discuss why it's essential to be aware of them. Stay tuned. What are investments? An investment is an asset or item purchased to generate income or appreciation. In other words, it's something that you put your money into with the hope that it will grow over time. There are various types of investments, but some of the most common include stocks, bonds, real estate, and cryptocurrencies. Stocks are portions of ownership in a public company. When you purchase stocks, you become a part owner of the company and are entitled to a portion of its profits. Bonds are debt instruments that governments and corporations issue. When you purchase bonds, you loan your money to the issuer and are entitled to interest payments over time. Real estate consists of any property that can be used for commercial or residential purposes. Investing in real estate can generate income through rental payments or appreciation if the property value goes up. Cryptocurrencies are digital tokens that are using cryptography to secure their transactions. Cryptocurrencies are decentralized, which means they are not subject to government or financial institution control. If you would like to secure your cryptocurrencies, you should invest in a hardware wallet. Out of all the options, there is one that we wholeheartedly recommend. Affiliate disclaimer: Movement is supported by the people. When you purchase through links on our site, we may earn an affiliate commission that helps support our website and its content. Learn more. Ledger wallets are considered one if not the most reliable cryptocurrency wallet solutions out there today. You can feel assured that your transactions will remain confidential with strict safety measures to ensure nothing is compromised during transmission, making them an excellent choice for those looking forward to a secure future. Check out Ledger wallets today. If you want to learn more about wallets and safely storing your cryptocurrencies, check out our previous post. What is investment liquidity? Liquidity measures how easy it is to sell or buy an asset. An asset with high liquidity can be bought or sold quickly and easily, while an asset with low liquidity may be more challenging to trade. Liquidity is significant because it affects how quickly you can access your money. If you need to or want to sell an asset quickly to get cash, you'll want to ensure that the asset is highly liquid. Liquidity is significant because it refers to how quickly an investment can be converted into cash. If an investment has low liquidity, it can take a long time to sell and get your money back. This can possibly be a problem if you need to access your money quickly. On the other hand, investments with high liquidity can be sold relatively quickly and easily. This is important if you need to access your money for an emergency or unexpected expense. Investments with low liquidity are often riskier because there's no guarantee that you'll be able to sell them when you need to. However, they can also offer higher returns if everything goes well. It's important to weigh each investment's risks and rewards before deciding. Why is liquidity important for investors to consider when deciding where to put their money? Liquidity is important for a couple of reasons. First, it affects how quickly you can access your money. If you need to sell an asset quickly to get cash, you'll want to ensure that the asset is highly liquid. Second, liquidity affects the price of an asset. A highly liquid asset is typically valued closer to its actual worth than a less liquid asset. This is because there are more buyers and sellers in the market for a highly liquid asset, which means that the price is less likely to be affected by individual trades. What is the liquidity of different types of investments? All of the different types of investments have varying levels of liquidity. For example, stocks are typically very liquid because they can be bought and sold quickly and easily on the stock market. On the other hand, real estate is often considered less liquid because it can take longer to sell a property. Liquidity is something that you should keep in mind when choosing where to invest your money. If you need to get access to your cash quickly, you'll want to select an investment with high liquidity. However, if you are willing to wait a little bit longer for your money, you may be able to get a higher return on a less liquid investment. If you want to learn more about stocks in the stock market, check out our previous post. Which investment truly has the least liquidity? The various different types of investments have different levels of liquidity. Some of these types of investments include real estate. As we mentioned before, real estate is often considered less liquid because it can take longer to sell a property. Collectibles, such as art or coins, can also be difficult to sell quickly because there is often only a small pool of buyers interested in them. Private equity is another asset class that can be difficult to sell quickly. This is because private equity investments are often made in specific companies or projects, and there may not be a lot of buyers interested in them. Venture capital is another type of investment that can be difficult to sell quickly. This is because venture capital firms typically invest in early-stage companies, which can be riskier and less liquid than more established businesses. Hedge funds are an investment type that can be difficult to sell quickly. This is because hedge funds often use complex strategies and investments, making them less attractive to potential buyers. It's essential to be aware of the liquidity of your investments because it can affect how quickly you can access your money. If you need to sell an asset or two quickly, you'll want to ensure it is highly liquid. The different types of investments have different levels of liquidity, so be sure to do your research before making any investment decisions. While liquidity is not the only factor that should be considered when making investment decisions, it is crucial. All of the various types of investments have different levels of liquidity, and it's essential to be aware of this before going out and making any decisions. For example, stocks are typically very liquid because they can be bought and sold quickly and easily on the stock market. What factors should an investor take into account when investing? There are a couple of factors that all investors should take into account when making investment decisions. In addition to liquidity, other factors to consider include risk. Different investments come with different levels of risk. Understanding the level of risk you're comfortable with is essential before making any investment decisions. Return. What are you looking to get out of your investment? Are you hoping to make a quick profit, or are you more interested in long-term growth? Time frame. How long do you plan on holding onto your investment? This will affect the types of investments that are appropriate for you. Diversification. Diversifying your portfolio is essential to reduce risk. You can do this by investing in a variety of different asset classes. These were just a couple of the vital factors that you should take into account when making investment decisions. Doing your own research and thoroughly understanding the risks involved before making any decisions is essential. A great way to do research is by doing technical analysis. Technical analysis can help you spot and identify trends in the market and help you in your investment decisions. Out of the many technical analysis tools, there is one that we wholeheartedly recommend. Affiliate disclaimer. Movement is supported by the people. When you purchase through links on our site, we may earn an affiliate commission that helps support our website and its content. Learn more. If you're looking for a place where traders of all levels can learn to trade, TradingView has everything from beginner-friendly features like chart patterns and indicators to the more complex aspects that will help advanced investors stay ahead in their game. Whether it be basic technical analysis principles or something specifically designed with beginners' needs in mind, this site offers what every trader could want. Check out TradingView today. To learn more about technical analysis, check out our previous post. Final thoughts. So, what do you think? Do you have a better understanding of the different types of investments that have low liquidity? It's essential to be aware of these options and understand their risks before making any decisions. Thank you for reading this post, and check back soon for more content from us. Disclaimer: Movement provides educational content only. It should not be taken as professional financial advice.